So you must have seen a rise in the metal stocks this week, and that has been quite a bit of a hallmark. The NMDCs, the Vedantas, Tata Steel, they have been doing quite well this week. All this is the natural result of the Chinese stimulus package. It is not a real bazooka. You may call it a mini bazooka, but I would say that has invigorated the metals market. The question is how far this can go. How far you can see all these various metal stocks doing well. The Hindalcos, the NMDCs, right? Commodity prices, as you know, have climbed up this week nicely, with oil, silver, and copper among the more recent standouts. And Chinese stimulus measures are there, but at the same time, I think that the traders should be worried about the outlook for this sector until they see the evidence that a global economy is improving. Whenever the stimulus measures get unleashed, the short-term reaction is always positive, and that's what you're seeing. But is the world economy, going to sustain these prices for a long period of time? The latest move from China has lit a fire under the investors, giving them a much-needed jolt of confidence. It is clear that the Chinese policymakers are throwing everything that they have got at deflation to jumpstart growth. Whether these moves will result in a long-term success is another thing, right? On Tuesday, Pan Gongsheng, the governor of the People's Bank of China, PBOC, said in a public briefing that a short-term interest rate would be cut and the amount of the capital which the banks are required to hold in reserve would be reduced as China's government moved to lift economic growth towards its 5% annual target. He also said that there would be a support for the housing sector and also for the equity market. The easing package from the PBOC is unusually aggressive and comprehensive. Okay? It is a welcome, if late, response to the alarming signal from the prior slump in the Chinese bond yields and weakness in equities. From a central bank perspective, what stands out is the range of measures, including the measures to support real estate demand and to allow the non-banking investors to directly assess the central bank finance against a collateral. That indicates the seriousness and also the complexity of the cyclical, structural, and the balance sheet challenges which are facing China, plus limitations on the effective transmission of monetary policy. The commodity market had declined, however, over the summer because of fears around slowdown in China and fears of slowing growth in both Europe and the United States of America. More recently, commodities have turned around because of the falling US dollar and most recently the US Federal Reserve's larger than expected rate cut last week of 50 basis points. The US Central Bank had announced a 50 basis point cut in its policy interest rate, which was also more aggressive and it was front-loaded. Tuesday's stimulus news out of China has removed another headwind for the commodities. All in all, I believe that a short-term outlook for the metals sector looks good, but be worried there could be trouble further ahead over the medium term. But short-term looks fine. Enjoy the party while it lasts. Enjoy the party while the music lasts, because when the music stops, the party will be over. But short-term looks great. To get to know more where the markets are headed from here, both the stocks and the commodities, do join any of our groups, Premium Value, which gives you 1 week predictions in advance and outlook for the commodities as well. And I'm sure you will benefit heavily from it. And you can also join Premium Plus, which gives you 10 to 12 days predictions in advance of the equity market. Also, it gives you the commodity outlook. To join either of them, you can WhatsApp us on 98208610044. Happy investing. Take care. Bye-bye.